Sup guys, your boy Quick Stocks is back. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into the analysis of Nintendo. So the Nintendo Switch almost overnight has become an absurdly hot commodity. As of 4/20/2020, Nintendo Switches are selling for $500 plus a unit. Will Nintendo be our savior in these troubling times, or are supply chain issues due to earlier coronavirus restrictions in China being mistaken for higher demand? This is your quick stock analysis. First of all, Nintendo's business operations, at least in regards to the stock exchange, are slightly different than we are accustomed to. It's important to note Nintendo counts its profit in the Japanese yen rather than the US dollar. And if you live in the United States, you aren't able to directly buy a Nintendo share, which I'm sure you're like, WTF are you talking about, as you pull out your Robinhood app. But hear me out. You can buy American Depository Receipts, or ADR, which allows US investors to acquire Nintendo stock by using American Depository Receipts, which are traded on US stock markets. A single ADR can represent one share, a number of share, or fractional share in a foreign corporation, which represents how you are most likely to become an investor in Nintendo, which can be found on ticker NTDOF or NTDOY. When you purchase one share of NTDOY, you are buying 1/8 of a Nintendo share traded in Japan. So in other words, a US investor needs to acquire 8 NTDOY to equal one share of Nintendo, which, due to its higher volume of trading, will be your quick stocks choice when investing in Nintendo, and what we will be talking about from here on out. But feel free to do your own research. This is an oversimplification at best. Now that we've got that out of the way, this is your quick stock analysis. NTDOY, or Nintendo, traded for $53 a share after hours as of 4/20/2020, with a $50 billion market cap and a PE of 25. Whether it's Super Mario, The Legend of Zelda, Smash Bros, Animal Crossing, Metroid, Nintendo has been supplying its customers with that sweet dopamine, and has created a dedicated fan base because of it. So what's the deal? NTDOY, or Nintendo, is up nearly 150% in the last 5 years. What the heck is going on? Well, when we look at the numbers, it gives us some clarity. Nintendo had a net income of $146 million in 2016, which has increased to more than $11 billion in revenue and $1.7 billion in net income in 2019. However, it's important to note that the Nintendo Switch and everything under its umbrella made up 85% of Nintendo's $11 billion revenue. At least on a revenue basis, Nintendo really is putting all of its Pokemon eggs into one incubator. However, at least in the last few quarters, and as for now, it seems as if Nintendo is being rewarded for it. But let's see if Nintendo has the power to keep this steam going. Current numbers state the Switch has sold over 52 million consoles worldwide, and nearly 30% of total Switch owners have bought into the Switch subscription service. That equates to around 18 million Nintendo Switch users paying a subscription fee, which has become a nice recurring revenue source for Nintendo. And of course, this quarantine will encourage some stragglers to adapt to the online subscription service and to digital game purchasing, which is far more profitable for game distributors. So I have to mention it because it's certainly going to have a significant impact on Nintendo's quarterly income. A huge hit during global isolation where people are craving normalcy. Of course, I'm talking about Animal Crossing New Horizons, which is on track to become one of the best-selling video games of all time in Japan. The game sold 1.8 million physical copies in the first 3 days. just in Japan, and of course, this isn't keeping track of digital sales, so the actual total will be significantly higher, a number far greater than any other Switch games released to date. And this is just in Japan. Around the world, Animal Crossing has been a massive success, at least in the areas it hasn't been banned. China. And despite Nintendo's prior warnings that the coronavirus pandemic would affect hardware production and shipments, more than 392,000 consoles were sold in Japan the week of Animal Crossing's release, the highest 7-day total ever for the Switch. However, when it comes to new releases, at least for the rest of 2020, we won't be seeing any more mainstream title releases. So a majority of Nintendo's income for the rest of 2020 will come from already released products. But obviously Nintendo isn't a one-trick pony when it comes to video game franchises with titles such as Mario Kart, Smash Bros, Super Mario, etc. Regardless of what Nintendo comes up with in the future, there's already a cult that will be there to buy it whatever Nintendo is selling. But like I stated, besides DLC, we won't be seeing any more major releases for at least the next few quarters. And of course, I've got to quickly cover Pokemon. In short, Nintendo owns roughly 33% of Pokemon, which includes the TCG card game, movies, merch, etc. Pokemon has since gone on to become the highest grossing media franchise of all time, with nearly a 100 billion total franchise revenue. The original video game series is the second best-selling video game franchise, only behind, of course, Nintendo's Mario franchise. It spawned a hit anime television series that has become the most successful video game adaptation ever. And of course, the world's top-selling toy brand and top-selling trading card game with over 28 billion cards sold. Oh, and a live action, books, manga, comics, music, merchandise, one of the most popular apps on the App Store, and a theme park. If you are considering starting a position in Nintendo, it's important for me to note Nintendo is the second most cash-rich company in Japan, with 844 trillion yen in net cash, or around 7.7 billion US dollars, which should be more than enough to protect Nintendo from any unseen circumstances. Let's quickly get into market share. Not only does Nintendo have to defend its market share from the big boys like Activision Blizzard, Sony, Microsoft, but its real competition, cell phones. It's going to be up to Nintendo to keep producing quality games and adapting their technology that can keep the culture alive. And it certainly looks like Nintendo may have its work cut out for them, as shift in gaming preferences is currently taking place. However, if Nintendo can keep creating new hardware, they still have a chance, considering they have such a strong brand with many of the most iconic video game characters ever created. If Nintendo can keep pushing their technology, I think it would be a safe argument that they will continue to produce dopamine for their customers that can't be recreated through a cell phone game. And Nintendo realizes this threat and is using it as an opportunity, as they are starting to invest heavily into Nintendo's mobile game segments, with massive hits such as Fire Emblem, and with its release of My Nintendo app in Japan, which links Nintendo products to one's phone. If a success, it wouldn't be a stretch to expect a release in the rest of Nintendo's major markets. However, it's important to note Nintendo's mobile revenue currently makes up a small percentage of all of Nintendo's gaming revenue, which means we could see mobile growth become Nintendo's next catalyst for growth. As always, do your own research before investing, but in my opinion, Nintendo is a great company and will continue to have many great years ahead of it. However, to be frank, I've already got a nice sized position in the video game market with Tencent, which honestly I see a lot more growth potential in it, and it's much more diversified. However, it is a Chinese company and that comes with its own risk, hence why you should do your own research. Anyways, that's all I've got for today. Take care, guys. Be sure to hit those thumbs, and I'll catch you guys in the next one.